So we're going to have a panel discussion talking about the topics that you heard about already today. But before we get to all that, we have two new people on the stage. So we might as well go ahead with them presenting ourselves. My name is Ville Sointu. I am currently working as the Chief Strategist for Digital Currencies at Nordea Bank. I think last time when I was here, I introduced myself as a recovering banker, and now I'm a relapsed banker. So, and also a podcast host. So I kind of fall fits into the story of doing things that are kind of cliche. So again, I will be hosting the panel today with these wonderful people on stage, and hopefully get some questions from the audience as well. But before we get to all of that, Bent, Thought Machine.
Yeah,
tell me
thank you
about
very much. My name is Ben Winkel. I have been in the business since the mid-80s, 16 years in banking, mainly what we know as Nordea today. And then in 2005, I moved to the software industry, MySys, Smart Screen, Temenos, and now Thought Machine. So I've been around for a while.
Did you sell to Aktia, Nordea, Temenos? You were, yes, I knew.
You're the guy, okay.
Sorry.
It was when I was on the dark
Yeah,
side.
I know, because we met when you were on the dark side. So,
Yeah, exactly.
I was like, hey, but it's good. But now you're cleaning it up. Or do you have the possibility to fix it?
Yeah.
Cool.
Oh, right.
I knew we picked the right people for this.
Exactly.
Yes.
So wonderful stuff. Really good to have you here, Bent. Really happy to have such a animated panel here today. So again, the point of the panel is to have an organic discussion. I have a few questions lined up here, so I'm actually not looking at my LinkedIn. I'm looking at the questions that we have lined up. But instead, what we do is we go ahead on different tangents in the conversations, just a little bit like you. If you listen to our podcast, we always go on very weird directions every now and then, but that all keeps it fun. But part of that organic journey will be you, audience. So if you have any questions, comments, if you want something clarified, if you loved something, hated something that we said, just raise your hand and we'll make sure we'll have a conversation with you, the audience as well. So don't stand back, don't wait until the end. Let's have a conversation between us, of course, on stage, but with you, audience, as well. Good. But let's get on with it then. So again, we heard Paul from you talking about the ecosystem banking and the platformification of banking, like you always like to talk about. Yeah. But I think Monika actually hit the nail on the head in the beginning of her presentation, saying that we never expected to see something like this from Samlink. And I think that's maybe a thought that the audience has as well. So, I mean, we heard what you're doing with Samlink Advisory Services. That much is clear. But I'm a banker, and I'm thinking, okay, isn't Samlink like a core banking provider with an IT service department? You're doing advisory, you have Thought Machine and Enfuse here on stage talking with you. What does that mean? What does it mean to actually engage Samlink Advisory Services? So what do I get and what do I don't get when I work with you?
Do we have 4.5 hours now?
No, we have 4.5 minutes max.
Need to compress. So you're absolutely right. I mean, for most people, they know historically Samlink is a banking as a platform provider, operated for a number of years for quite a number of financial institutions in Finland. And Samlink will continue to be a platform provider at its core. But a couple of years ago, Samlink was acquired by Kyndryl, which is a global infrastructure company, right? So Samlink overnight went from being a Finnish banking platform provider of about 500 people to a global banking vertical for an organization of close to 100,000 people. With that transition and also opening up the capabilities for us to expand, some clever people in Samlink said, well, what we are missing is the ability to be a trusted transformation partner for the banks, right? But stepping away from just being a platform. So Samlink Advisory Services is a consulting organization. We are focused on engaging with financial institutions to help them to transform and to be future-proof. Because I think that's one of the critical things, and you said that as well. If banks continue on the trajectory they're on today, they're going to hit a wall at some point in time. So how do you create that transformation that is as low risk as possible, as fast time to market as possible and brings you value as quickly as possible. Right? Well, to do that, sometimes, and I think you said this again, trusting and relying purely on the people in-house creates a blinkered dynamic for you. You need that independent third-party bunch of people that also have been elsewhere, done this with other customers in other regions, and can bring fresh set of eyes to the problem, right? So in a nutshell, Summlink Advisory Services, we are agnostic from our friends in the platform business, which is why we've got partnerships with Thought Machine, we've got partnerships with Aura Cloud, we've got partnerships with other providers, talking
Soon,
partnerships
yes,
with Enfuse,
definitely.
right? Now, some of them end up being providers to the platform as well that enriches the capabilities for our existing customers. But for me, personally, it's about bringing that ecosystem that we talk so much about to help the banks that I engage with to accelerate their transformation.
Okay, so this is a cheeky question, so just a heads up.
Yeah.
So you won't get a bonus if at the end of your project, the bank buys Summlink.
Actually, that's a...
The answer is no.
You should answer no.
The answer is, I was actually going to be a little bit more flippant and say, I don't get a bonus on what they buy, I get a bonus on their success, right? But no, I do not get a bonus if they buy Summlink. My role is not predominantly to sell Summlink. My role is to help a bank be successful in their transformation.
Good. I guess maybe a good example of that is that we have Thought Machine here on stage with you. I mean, if at the end of the day it turns out that they want Thought Machine instead of Summlink, then that's an equally good outcome for you, right?
Absolutely, because on top of that, we have got great experience in operational resilience, in hosting and in running platforms. So not only can we help with implementing Thought Machine to have it as part of that core transformation, we could operate and run it and put the stability into it as well. So yes.
So of course he gets a kickback. What a stupid question. As he should. I think, and I think that's the thing, like really understanding that work is valuable. It is actually really critical. And again, coming back to what I said, that banks have had at least a tendency to try to get that for free. There is nothing free. You will pay in the end, and you will pay it with failure because you didn't put the money where you would have needed it to first.
Yeah, and actually to add to that, the cost to fix that afterwards will exceed much more what you could have paid
Exactly.
to get the right advice in the beginning.
Yeah, so it's okay to pay Paul. That's kind of the outcome of this.
All right. So, by the way, if you do have questions, we do appreciate puns related to kitchens, food, cooking this time around. Last time when I was here, we did a lot of dental jokes for another reason, but let's keep it in the food component right now for this panel. So good. Let's move on here. So Monika, I mean, you are, of course, as we heard, founder of a fintech or a co-founder of a fintech. You also worked on the banking side of things. You talked a lot about what is the journey for fintechs to work with banks. What are the lessons learned along this way? But I want to double click on that a little bit. So one of the themes that we hear in the fintech scene these days, so there actually been a few years now, is that instead of fintechs disrupting banks or replacing the banks, they are now most of them are moving into a model that, no, they're not going to challenge the bank as much as they're going to work with the banks. From your perspective, I mean, is this true? And then second of all, is there something that has changed when fintechs are moving from this disruptor to cooperative model?
Yeah, I think first of all, it makes sense to collaborate because I do think that, having lived the dot-com boom and the crash in the telco industry, I was a bank CIO when the financial crash came in 2008 and so forth. We had this fintech hype, I think from 2015, 16 to one and a half years ago. And it was all about tech. And what happened was that you lost the focus on compliance. And if I look at my let's say challenger companions or competitors, too many have been hit by compliance problems, that they have grown way faster than their understanding of the criticality of anti-money laundering, human trafficking, and all the bad shit that comes with this scene, if not mitigated in the right way. That has then, of course, killed many of them, which is good. Stuff like that shouldn't exist. So I think it's a healthy thing. And it also has brought the focus, because then banks were scared of, like, oh my God, they're going to disrupt, going to steal our customers. And instead of doing something, collaboration started just trying to, I don't know, set up accelerator programs and kill them off by PowerPoints or something. But I think now the collaboration is where it should be. So finally something good is starting to evolve. So the ones that are actually still alive from the fintech scene, they are mature enough, either as a business or in the mentality, that there is a possibility to collaborate. And also I do see that in the banking sector, we're starting to understand what speed and simplification and focus actually can bring to the table. So I think it's just an evolution. So it's not a revolution, it's an evolution. And now it's like the ones who didn't die understands that collaboration is the way to survive and strive.
Me and Paul in the podcast, we love talking about regulation and compliance.
Yes, I
for
love it.
weird reasons. Don't ask why. So but it's actually quite interesting when it comes to the cooperation element between banks and fintechs. And we all noticed in the news that Enfuse just got an e-money license in the UK. And I don't think all issuer processors actually have e-money licenses.
No, we're the only one.
Yeah. So is that part of the story? Or makes it easier to work with banks, or?
I think yes and no. So the no part is only because some might confuse it with us competing, but it's actually two things. First of all, as a licensed entity, we are an EMI and payment institution under the Finnish FSA and passported in all of EEA, and then now in UK under the FCA, is of course that we sit on the same side of the table, which means that we get the information at the same time. We understand and we can solve. So we understand what the challenges are, and we can take, that's our core business, to take care of that. But it also, of course, open us possibilities to do stuff that banks maybe don't want to touch because of compliance and resource challenges. Like, for example, the Finnish State Treasury, where we issue and process the cards for Kela, Rise, Migri. So projects and use cases that are important, where the money is legit because it's the government, and with our technical capabilities for preventing fraud and doing a lot of blockage and stuff in real time, in combination with our license, of course, it enables us to add these capabilities. And also what we can see now really in the platform business, the EMI, so the ability to safeguard, or to be allowed to safeguard and hold funds is critical for many businesses. So we for example helped Volt to become an EMI back in the days, and now they wouldn't even have to be that anymore. They could just buy that as a service. But it's opening up for us to be a relevant provider for those, but we are not trying to compete. We want to have good big banks who would actually be our safeguarding bank, so that we can really drill down into the efficiency of money. Because also as an old banker, I'm really happy for many reasons about the interest rate market now, that actually money costs money. And when money costs money, a lot of weird shit don't get funded, and they shouldn't have been before either. So I think it's a good place to be.
Yeah, I completely agree. Just reflecting on what you just said and what you said earlier as well. There's two things that I look at as a banker when I see a fintech, or typically in the digital currency space coming to my door, is what is your compliance strategy? Is there any kind of license that you have ever achieved? And if yes, that's a good thing, because that means that they take it seriously. They understand the rules of the game. So I think that's an important thing from a fintech perspective. And then other thing is that, especially when these companies, they come with references. They say that we work with these 15 European banks. Many of them are extremely large. Then I ask, okay, tell me, who is your contact person in that bank? And if I see head of innovation lab, head of digital innovation, head of emerging something. I was emerging tech earlier, so I know that. So again, that means that these are not real projects. Unfortunately.
Yep, I know.
So but if you see like head of trade finance, head of transaction banking, if you see head of cross-border payments, that means that these people have P&L responsibilities. They know they have something they need and get from this collaboration, and that makes it a serious project.
You know, if you want to look at our whole structure, our ESG report that we have pushed out, because we want to be very transparent about what things we do. If you look about our governance structure and how we work with the first line, second line, third line defense and all of that, it's all there publicly. Because I think my biggest challenge, or one of them, I have many different types, is that when my counterparties or competitors, as I'm put in boxes, default because of AML stuff or stuff like that, it reflects badly on me. Just because everyone is like, okay, but when is their time? When will that happen? And I think as a fun fact, look at how people have, like companies have grown. If they have grown, 3 number digits growth the past 4 years, it's an awesome thing, but look a little bit closer, because I think that's also like the challenge, that if you grow too fast in volume, have you had the capacity to really put your first manual processes, which is normal. Like when you start small, it's okay to do manual. But when you start having multi-million customers, we have 17 million end customers banking with or doing their daily transactions in our platform. I wouldn't have automation, machine learning, AI capabilities to look at AML, fraud, etc., I would be the next. But I'm not, because I have that shit covered.
Good stuff. And I want to circle back on some of the cloud stuff you said earlier, but I want to bring in Ben to the conversation here as well. So first of all, welcome and thank you for listening for 15 minutes.
Thank you very much.
So but I love this combination of people on stage. We have the consultancy side, we have a fintech, and we're talking about collaboration between established financial service providers, fintechs, building these ecosystems through platforms. Thought Machine is, I guess, a platform, and most of us know the basics of it. So it's a cloud-based or cloud-native offering, very kind of third-generation, modern, modular platform. Even Paul talked a little bit about what is the difference between your Thought Machine platform and call them classic providers. Not going to say them by name, but you worked, as we heard at the beginning, for many of them, or some of them at least. So what is the difference between these modern cloud-based platforms like Thought Machine and the more classic ones, and how do they make it easier for banks to work with fintechs?
Yeah, a little bit the same as Paul. Do I have 4.5 hours to explain that? So I'll do the short version.
Please put the microphone.
Yeah, okay. If you look at the more classic vendors, as you call them, some of them is founded 30, even 35, 40 years ago, where their systems is coded in COBOL, Java, and a lot of old coding language. And this is not the technology we see today. This is not the technology that banks or any financial institutions want today. So they have been, for the last many, many years, trying to change that old legacy coding into something modern. And this is not something you do overnight. You don't go from COBOL Java code into Python, make that componentized, make that cloud native, cloud agnostic APIs. We are in a different situation because we are founded 2014, and our founders was actually working at Google, and actually went out of Google and created our solution Vault based on the way of coding, the way of working with software. So we don't need to transform anything. We are the new technology, meaning that we from our birth was cloud agnostic, not API first, but API only. So the way we operate and implement our solutions compared to the other is completely different. Because you all know I had a history in Temenos, which is a fantastic system. There's a lot of functionality from all over the globe built into that solution, but it also makes it very, very comprehensive. It means that if you only need a small piece, deposits, lending, whatever, you cannot just take that piece. You have to implement the entire system. Not only Temenos, but a lot of the classic vendors is exactly in the same situation. Another problem they have is coexistence. They would like to go in, wrap and replace the entire thing, where we can easily coexist with the old legacy. So we create, or our customers create many times a digital platform that put an OpenShift on top of the legacy, so we are coexisting. So you can actually build and expand, not end up in a big bang, but actually take it piece by piece. A very good example is one of our first customers and also investors in Thought Machine, Lloyds in London. Because of the high interest we just talked about, they need urgently a deposit product they can put on to the UK market. Lloyds being the biggest retail bank in UK. So within 12 months, they built a new digital platform, integrated with the old legacy, managed to get within 2 or 3 months, 1 million retail customers with a deposit book of 11 billion pounds. So it just talk about the strengths, because I don't think any of the classic vendor could have done that in the same speed. So the plan is now how to leverage this and see how can we then step by step migrate old product, old customers into the new platform. And as you say, Monika, time will solve it up.
Yes.
Either the product or the people will die.
Yeah.
So it will solve itself, right?
Yeah, true. I agree.
Yeah. Great points. But I'm an engineer, so I have to ask some questions. I'm sorry.
And I'm a banker, so I'm not techy at all.
Yeah, I'm a hybrid guest. Anyway, so so how do you do it? I mean, you said all these issues that we have with the kind of more classical vendors, and that Thought Machine doesn't have these problems. But how exactly? I mean, what is the setup? What if I buy from Thought Machine? I want this fast time to market capability. What are the things that I need to do differently that I do today with the more classical vendors?
There's many different things you have to do. And I think we have talked about it today. Don't issue an RFI, RFP. Come up with a use case. Let's test it together. And also, when you come up with a use case, you have to make sure, don't look at the old legacy bank. Don't replicate, copy, paste the old system into something modern. Look at how your future bank should look like. And let's discuss together Thought Machine, the customer, but also with partners like Samlink and others. Because most of the banks, or the people in the banks, have never ever been in such a journey. It's the first time. There's a lot of knowledge they don't have, because where should they get it from? This is what we are living day in and day out. We have done it before. We got, as global companies, inspiration from all over the world. So there are so many lessons learned. So don't try to copy paste what you have, but look at how you want to create your future bank. Don't want to do everything in one go. Take the most critical use case, test it out, implement it as an MVP, and then move forward and set it into production at a later stage.
Okay.
So maybe as tips for when you are that banker, see this as a learning opportunity. Yes. It is okay that you don't know. You're not supposed to know unless you've done it. I have 4 kids. So if I remember the first one, giving birth and all that stuff, with the third and fourth, I was like, hey, all the drugs here now, thanks and bye. Yeah. So it's the same. So it is pretty much the same. So we've done it before. We see a lot of different things. So I do think also, if I would tell my younger self a tip, go into them with an open mind and understanding that you're not supposed to know, but you're supposed to be able to articulate what you want to have as an end game, or at least some use case ability, and your job is to manage the stakeholders internally to get them excited and part of it. Because if you don't do that, if you just issue the RFI and RFP and you have an external consulting doing it and we can't even talk to you because they are afraid that we're going to influence you, like I don't know how, maybe give you some energy or something, but I think it's going to go to shit.
I'll add an extra point to that, because we've talked an awful lot about define what your future bank looks like before you step further, right? Think of the MVP, etc. One of the repeated discussions that I end up in very often with bankers is the fact that they are very blinkered on their local market very often. So to them, what does the future bank look like? Almost is a straight line view from where they are today. And they don't think about, well, what are you said this as well, in Finland, fairly local, the banks don't really compete with each other. It's when some new player comes in. Well, if you've been focused on the Finnish market, you believe that the Finnish market is going to slowly move forward in the way that it is. Who actually has visibility on what's happening outside of Finland? Who understands what is coming or potentially what is going to happen? I mean, we talk about this a lot on our podcast, right? But so I think very often there is a need for the banks that are setting off on this journey to say, well, we could benefit from fresh eyes, from new perspectives. They don't necessarily have to set the journey for us, but they can at least challenge us on our thinking to help us to define that new future that we're going to take as a journey.
Yeah, and I love the point that also Monika you made, is that sometimes when you have these conversations and you're saying, why can't we do it this way? Then the person on the bank side says, oh, it's compliance. But then that's actually code word that I don't know.
Exactly.
We've always just done this way. We don't really know why. Some person kind of figured it out with an Excel sheet 15 years ago, and nobody has been daring to challenge that. So now we're trying to replicate that 15-year-old Excel sheet into new technology, rather than trying to figure out, do we really need the Excel sheet, or is there a better way of doing that? And the code word there really is compliance. Sometimes it's true, mostly it's not.
But I agree. Seriously, I think that's the mindset that you need to have. Because when you see that, then that's when change can start happening. So it is not tech, it is the people. Because you say we can go in, it's a mindset.
Exactly. And this brings us back to a good segue to kind of a strategic question that we a bit touched on, but let's get Paul to explain this in a very kind of comprehensive way, which is that when you're engaging with traditional established incumbent banks, they have, as we established, they have a lot of sediment, a lot of legacy. Some people, one of my former CEOs called it like a spaghetti. And the same person also said that we need to move from a spaghetti into a lasagna, where you have different layers of legacy, and then on the top you have fresh stuff and things like this. I'm moving into the food references now, you can see. So but what are actually the transformation strategies to actually get there? Because, and let me bring another food thing here, because as we know, some of the banks, and I think SEB is an example of that, they have done this speedboat approach. So their idea is that, well, we have a nice beef lasagna here, but we have somebody who wants a vegan lasagna. So you're not going to take the ground beef out of the all other lasagna. You're going to start another dish on the side with vegan proteins, right? So can you maybe elaborate a little bit? So does this mean that we always have to build a new thing on the side, or is there still a way to stick with the lasagna approach and kind of do it gradually? How would you do it?
I love all the connection here back to my kitchen. At the end of this, I'll tell you how the renovation completed. But I think the first point is every bank to a certain degree is unique, right? One of the reasons why I always say evaluate your legacy last is because what you really want to do is to just look at what is the implications and the risks and the costs of me to deal with this that's sitting here, right? And how can I minimize all of that as much as possible? In an ideal world, you would just let it die off and everything else. But you can't do that, because the core value to a bank, like we've said, it's deposit taking, it's the data they've got on their customers, and it's how do you take all of this and drive maximum value? And it's not to try and do a big bang. It is to say, what is going to differentiate me? What can I build theoretically on the side? And there is the extreme, which is the speedboat approach, like, take one use case, test it, MVP, get it done. or it's build a completely new digital bank on the side. You know, SEB embedded as a good example. Or it's a hybrid of the two. And I think the banks that have been successful, and I'm not going to mention banks' names at the moment, but the banks that have been successful have actually understood what is it that's relevant for me to take the risk on, right? To move. I said this earlier. Banks that say we need to get off the mainframe, I cringe. It's a little bit like, you know, we're a bank, we're an IT company with a banking license. Cringe at that as well. But most banks don't want to get off the mainframe. They want to get off COBOL. But the infrastructure of mainframe is fantastic. It's so resilient, so stable, and it can manage. There are banks that have realized that when they go to cloud, they can't manage the throughput of transactions. The only platform that can do that is the mainframe, right? So get off the mainframe isn't even going to happen in any logical way. But get off COBOL, absolutely, right? How you take that journey, it comes down to having a strategic approach on how you move that forwards. Is there one answer that fits everybody? No.
But yeah, sorry.
Yeah. Can we set a relevant path on that journey? Absolutely we can. I mean, one of the examples that I very often take with banks when they're looking at modernization is mortgages. Right? If you say to a bank who's looking at doing a core modernization where they're saying, well, we're going to modernize our mortgages as well. I say, absolutely, that's great. Don't touch your existing mortgages. And I say, well, why? Well, one, you might actually redefine what a mortgage is. Now, Finland is a little bit unique because you have mortgage. A mortgage is mortgage. You go to the UK, you have every variation of a loan to a, you know, the world's largest overdraft. But still, you might want to redefine what mortgages are. The minute you drown your new fancy core with all the old definitions of loans and mortgages, you've recreated the old in new. It's reimagined digital lipstick, right? Most people remortgage every 10, 15 years. Either they're buying something new or they are renovating or because their kitchen has got messed up, right? At that point of remortgaging, you can say to them, we've got something new and fancy. This is back to, you know, let the old die gracefully. Don't force the migration. Just let it die off. Yes, you've got a cost associated with it, but actually the cost of letting that die off is probably less than the number of customers you're going to lose because they say, well, if I need to recontract my mortgage, I'm going to go and see what other options I can get. Don't force them into a competitive situation.
And this is a quick question. So are you saying that each and every bank is its own unique snowflake when it comes to the needs and the strategies, or do you see templates on different types of banks?
As I presented earlier, right, that there are 3 slices in the pizza, right? And the half of that pizza says what differentiates you from your competitors. The other half of that pizza says, what are you operating on that makes you a bank just like everybody else as a bank, right? Now, are banks snowflakes? On the side that says what differentiates you, to a certain degree, yes, because that's their competitive advantage. They want to be a snowflake. They want to be differentiating. They want to do something different. The rest of it, a car's a car. You need wheels. Don't reinvent the wheel. Just get a partner that will give you the wheels, unless you're going to do something fantastically different. It's a wheel.
Great.
Sorry, if I take a challenge on your lasagna
Go
thing.
for it.
So I think with SEB, what they realized was that they were serving a meat lasagna, but actually they were an Italian restaurant or trying to be. And then SEB Embedded came and said, like, you know, actually there's this huge potential in the market for Asian fusion. And that's when they decided. So I hope that what will become the output of SEB Embedded is that then the mothership will realize that actually our customers also want the Asian fusion, maybe some random lasagnas, and they're actually vegan, and then SEB Embedded with Thought Machine and Enfuse can deliver it. So it's a strategy.
Yep.
And actually, if I can add to that, because I like cooking. So, and I got 3 daughters, and one of them was vegetarian some years ago. Now she's back to normal again.
Yeah.
But the thing was that if you make a lasagna, the foundation, the tomato sauce is all the same. The bechamel sauce you put on the top and all the only difference is the meat. So you actually have, when you put in the meat, you actually take 2 plates, put vegan in one and the other one, but all the foundation is the same. So if you, as Monika said, SAP embedded, a lot of the sauce is the same, where the meat is different when you go into the mother bank and when you go into SAP embedded. And you asked the question earlier, I'm not sure if I answered it, where you say, how do you do it? We have a little bit the same. We are extremely flexible. We have a 2-layered approach where the product layer is something that we support and we upgrade and develop, but the configuration layer is entirely open, which means that our customers have access to the source code. So again, how do we differentiate from the classical vendors? If you need to change the interest calculation, as we talked about earlier, I don't know any other vendors than Ford Machine where the customers can do it themselves, either themselves or with a partner. Any other classic software vendors, you have to go back and do it. So that's again where you differentiate. And all the source, if you can say so, we have a predefined, documented, fully operation product library that we can give to our customers across retail, and now we are also expanding into corporate banking. But what you do on top of that, how you want to differentiate, is entirely in the hands of the customers.
We have the same approach, however, with the small caveat that I don't trust the banks to know what they're doing. So with that, they would then come and cry to me that we changed it was so flexible that we changed the interest and then it went to shit, I'm going to sue your ass. So of course there are some, but technically exactly the same. So the whole foundation is built in a way that is very flexible, and then you just put human intervention controls that they don't kind of screw it up. Because when you have these engineers like, oh, this is so awesome, I can build whatever I want, it's like, yeah, but it has to be compliant and you need to get paid for it and so forth. But I think that's the whole thing with the technical thing, how both Enfuse and Thought Machine have been built cloud native, is that it's microservices, it's flexible, it scales indefinitely, and then we'll put much more controls on top of that as a own layer just to mitigate stupidity.
Exactly.
Yeah, some call it like a constrained SDK approach. But
Yeah,
anyway.
exactly.
So, okay, first of all, points across the board. Pizza, Asian fusion, vegan lasagna. Everybody gets points for food references. Great. But now, before we're going to switch gears a little bit, and I'm looking at the time, we have 10 minutes left. I do want to make it open for the audience as well to now raise your hand if you have any questions or comments. Did you completely disagree with something you heard so far?
Please do.
There you go.
Wonderful.
The market is pushing that change, that people have to take that up, the banks have to take that modernization journey, or this is something proactive that banks are taking up and then you are aligning with that? Or is it the market force kicking in?
Who wants to take first?
I can do that. I actually think it's a combination.
Yeah.
I don't think that the banks renovate just because they want to renovate, unless to use your phrase, they have a really shit technology.
Yeah, exactly.
So
when that happens,
yeah.
I mean not some link, but your kitchen. Then they do.
Yeah. I think it's more like the example I gave with Lloyd's, where they saw a business opportunity to attract more funding, more customers. We can go many places in the world. We have a customer in Hong Kong called Mox, which is owned by Standard Chartered. They want to create a card where you could actually use the card as a debit, as a credit card. At the point of sale, you used it as a traditional credit card, but when you came home, you could actually transform it into a credit, buy now, pay later solution with different payment,
Plans and stuff.
Yeah,
Yeah,
exactly.
yeah.
And and that was a business idea. We went live, or they went live in 12 months, and now they managed to get more than 500,000 customers in 3 months. They copy-pasted that to Singapore, put on their new brand name called Trust, and they now have more than 10% of the population in Singapore on that specific use case. So for me, it's more a business driver. But once you have the business driver, why not look at the technology in parallel to that?
And also I think from dependent also again a little bit on where you are and what are the drivers. But I do think also that the banks are now well positioned as they are striving in this interest scene environment, which means that there are not excuses not to spend money to earn more money. So I think that's the thing. That's a good thing. And of course, then it is a mindset. So you can have. I used to say that I don't want to sit in a room with a counterparty prospect if I have the IT, compliance, and business in the same room, because they are so measured differently. So it often ends up them arguing with each other. So you try to really go in and understand who you're talking to. And that's why I really like this type of approach, the advisory, because you want someone who can tell that there are good partners. And when I understand your business case, I actually said Aura Cloud could be here, Enfuse could be there, Thought Machine could be here. So that's what you need as a bank. So it is both. But then also come these legislation changes that will force you. And then again, it's a mindset. Do you see that as something you have to do and it's a painful journey? Or do you see it like, okay, if I have to do it, everyone else has to do it, how can I actually benefit of doing that? And I think that's where, again, coming back to my competitors, where they failed to see that it's a longevity game. For them to be successful on long term, they should have embraced compliance. I see too many fintech startups trying to really they sit down, okay, how can we issue this kind of product and have the bare minimum and do self-assessment security things, and then they succeed because the product hits the market, and then you're kind of just fucked by default because you didn't have the compliance in place, and all the things you thought you knew actually weren't true, and then you are liquidated, for example. So I think it's a person. There are different type of people. There are also awesome growth-minded people at banks.
So, advisory services as hostage negotiators.
Exactly.
So, Paul, anything to add?
I think it was a good question, by the way, and I don't know if it got picked up on the video, but I think it's a multifaceted answer. First of all, we all know the only constant in life is change, right? So change is happening. Secondly, we know that as humans, our human nature is to be lazy. We want things fast, simple, easy, and we're driven by a technology-infused future, social media, everything else, and therefore we inspire our lives around that. And money is no different. Add to that the fact that we are facing a future that is foundationally uncertain, both from geopolitical situations and everything else. I think consumers are driving and pushing for change towards the banks. The banks don't want to change. They want to stay constant, right? But change has to happen. Secondly, I think, is that just like my kitchen, technology by itself drives the need for change. And it's partially driven by compliance, but also other elements. I mean, we see this with banks time and time again, where you have a cause and effect situation. We need to upgrade this because the vendor is going to stop supporting it. But to upgrade that, we need to upgrade this. But to upgrade this, we need to upgrade that. And before you know it, you've got your spaghetti architecture that's so broken that it's all hanging together with super glue and string. And that's operating your bank. So sometimes technology drives the need for change. What it comes down to at the end of the day, and very much why we've got the ecosystem-enabled banking, is because, one, you must drive it from business need. Yes, there is an element that says the technology is going to break, but that actually is a business driver, right? You drive it from business need, and that business need is impacted also by changes in consumer behavior. So I think the answer is both, right? But you need to engage on that journey in the right way.
Thank you. I think that covers it. More questions? We still have time. There you go.
All right, first of all, Thank you for great presentations. Thank you for great discussions. It's been really inspiring and really good fun as well, I would say. I have a small question regarding Bayern. And we all know that most banks claim that they have adopted the Bayern process framework. But we also know that when you move from one bank to another, then you see enormous variety of different processes in every different product area or process area. And I was just wondering, I mean, do we really have good examples of banks with good level of discipline with the Bayern process framework and clean implementation of Bayern anywhere at all? Good examples I would like to hear.
We're back to it being recorded here now, right? But Kaiser Bank is a very good example of that. I think you're highlighting a good point, and that's the fact that Bayern is very strong, it's very inclusive. I mean, it's everything from business domains, business capabilities, all the way down to semantic APIs, the data model, and everything else that goes with it. It's very, very powerful. It hasn't been around since the dawn of computers, right? There's been predecessors to that. So when you look at a lot of large banks, they've got a Bayern-infused framework today. They're on that journey, and you only have to look at the number of banks that are signing up to become members of Bayern on a yearly basis. You can see that the industry is moving in that direction. Do the banks need help? Yes. Do the vendors need help? Yes. Are we going to have a fantastic future when everything is aligned? I think we're going to have a better future. What I'm noticing with a lot of banks is that they are at the moment cherry picking because they've got an existing definition of their bank from an IT perspective. They probably don't have a very well aligned business capability that drives that journey going forwards. So they have to retrospectively create that. And also on top of that, they, if I'm very honest, don't have a very well-defined current picture, right? They've been very good at not necessarily documenting everything. And I think that actually partially comes back to the fact that if you don't have a good framework to build from that gives you some of that foundational elements for you to work from, and you're trying to invent everything yourself, you lose things in translation. So Kaiser Bank, I would give as an example, and then look at the list of banks that are members of Bayern.
Great question. Good answer, I guess. Right, more questions. We still have a few minutes. I'm not going to push it more. We're in Finland after all, so let's leave it there.
I was just wondering, I mean, a great company you have, Thought Machine, and the question, and this may be a little bit difficult to answer, but still asking that, I mean, how unique you think that your sort of capability of coexist with other legacy or traditional systems or platforms is? Or is it that, I mean, there are traditional platforms and then there are modern platforms, and all the modern platforms are basically similar and you don't have a big advantage on those? Or is it that you have something very unique with your capability of coexisting with the traditional platforms?
Good question, and I'll try to answer it as honest as possible, because when you and I met some years ago the first time, I represented another company, and that company want to basically sell you everything. Some of it was fantastic, some of it was less fantastic, because it has been acquired, developed over the last 30 years, so there's a lot of functionality in it. So, and these old systems, or older systems, is in a transition being the modern technology, as I mentioned earlier. So the nature of those systems is they are massive, and they don't want to coexist if they can avoid it. They want to replace everything. Where we have a different mindset, we don't want to do everything. We want to be the best of what we are doing, which is the core banking, so the back office part of across retail now moving into corporate as well. So if you went with a lot of other companies, the classic ones, you could actually build a bank end to end. We cannot do that. We don't want to do that. We only serve a small part of a bank, being a part of a big ecosystem. So in order for us to be relevant and get that small piece, we need to be built and configured in a way that we natively can adopt and coexist with any other system. So I think that's the biggest. And to your question, are we unique? I think we are, with an exception of maybe 10x. But next to that, I'm not aware of any other vendors who have the same capabilities.
Thank you. Good question. Great answer. Or the other way around, you choose. I gotta say, we got through maybe 10% of the questions we wanted to talk about, and the next question would have been for Monika, because I wanted to hear, because she has actually built the bank from scratch. How would she do it today? And in order for you to get that answer, I can tell you that Monika will be a guest on the FinTech Daydreaming podcast very soon. So maybe we will ask that question there, and you will get to hear her answer to that. So listen in and subscribe and tune in. With that, I will close the panel, and I guess you're going to have some closing words, Paul, or how do we do this?
Yes, I've got some closing words and I'll do that. But for this part, thank you very much, Monika, for joining us. Thank you very much, Ben, for joining us. It's been a fantastically good discussion. I think the end result out of this is we can all say change is happening. There is no way trying to stop the change. And from a banking perspective, doing it all yourself is not the future. It is about taking advantage of best-of-breed partners to help you to implement what is unique and differentiating for you, and also helping you to step a path through a quagmire of legacy transformation in a risk-averse way. And I think there's fantastic fintechs and partners and providers in that ecosystem that can help to make that journey
Less painful.
less painful.
Yes.
Yes.
Unless you like pain, that's also doable. But like, no, okay, that's the after.
That's a
after
that's a
part.
different panel
Yeah,
discussion.
okay, cool.